In this chapter, we will cover internal auditing and activities performed by governmental auditors. At the end of this chapter, you should be able to explain the role of internal auditors in financial auditing. Describe the auditing and reporting requirements under governmental auditing standards and the Single Audit Act. Distinguish operational auditing from financial auditing, provide an overview of operational audits, and be able to plan and perform an operational audit. Let us begin by discussing about the role of internal auditors in financial auditing. Professional guidance for internal auditors is provided by the Institute of Internal Auditors. The Institute of Internal Auditors defines internal auditing as an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. Internal auditors helps an organization in accomplishing its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. Internal auditors are expected to provide value to the organization through improved operational effectiveness while also performing traditional responsibilities such as reviewing the reliability and integrity of information, ensuring compliance with policies and regulations, and as well as safeguarding the assets of the organization. The Institute of Internal Auditors Code of Ethics is shown in Figure 26-1 on page 828 of your textbook. Internal auditors are responsible to management and the board, whereas external auditors are responsible to financial statement users. External auditors rely on internal auditors when using the audit risk model to assess control risks. If internal auditors are effective, the external auditors can significantly reduce control risks and thereby reduce substantive testing. Moving on, we will now discuss the auditing and reporting requirements under the Government Auditing Standards and the Single Audit Act. The primary source of authoritative literature for doing governmental audit is the Governmental Auditing Standards, which is issued by the Government Accountability Office. These standards are often called Generally Accepted Government Auditing Standards. Because of the color of the cover, it is usually referred to as the Yellow Book rather than its formal name. The initial Yellow Book was similar to the Generally Accepted Accounting Standards, but it has been expanded to provide guidance standards for performance audits. The financial auditing standards of the Yellow Book are consistent with the principles of the American Institute of Certified Public Accountant Auditing Standards and also contain extensive additional guidance including materiality and significance, quality control, compliance auditing, and reporting. The Single Audit Act of 1984 provides for a single coordinated audit to meet the audit requirements of all federal agencies. Entities that receive more than $750,000 in federal funds are subject to a single audit. The requirements for the audit are the following. The audit should be in accordance with generally accepted governmental auditing standards. The auditor must obtain an understanding of internal control over federal programs sufficient to support a low assessed level of control risk for major programs. and the auditor should determine whether the client has complied with laws, regulations, and the provisions of contracts or grant agreements that may have a direct and material effect on each of its major programs. Under the Single Audit Act and the OMB Circular A133, the requirements for reporting are the following: an opinion by the certified public accountant on whether the financial statements are presented fairly in all material respects in accordance with generally accepted accounting principle. An opinion by the certified public accountant as to whether the schedule of federal awards is presented fairly in all material respects in relation to the financial statements as a whole. A report from the certified public accountant on internal control related to the financial statements and major programs. A report from the certified public accountant on compliance with laws, regulations, and the provisions of contracts or grant agreements where non-compliance could have a material effect on the financial statements. And a schedule of findings and questioned costs is included in the report. Two relevant sources that an auditor can use are the American Institute of Certified Public Accountant Audit Guide, Government Auditing Standard and Single Audits, and the Auditing Standards in Compliance Audits. On the next slide, we will differentiate operational auditing from financial auditing. The major differences between operational and financial auditing is, unlike financial auditing, operational auditing emphasizes effectiveness and efficiency. Operational reports are intended primarily for management, while financial auditing are primarily intended for external users. And lastly, the inclusion of non-financial areas in operational audits. Operational audits cover any aspect of efficiency and effectiveness. On the next slide, we will go through an overview of operational audits. What is the difference between effectiveness versus efficiency? Effectiveness refers to meeting the objectives of the organization. In contrast, efficiency is defined as reducing costs without reducing effectiveness. Management establishes internal controls to help meet the organizational goals. One goal of internal controls is to help achieve operational efficiency and effectiveness. The purpose of operational auditing of internal control is to evaluate the efficiency and effectiveness of the controls. The scope of operational auditing concerns any control affecting the efficiency or effectiveness. There are three types of operational audits. The first type is the functional audit, which deals with one or more functions in an organization concerning, for example, the efficiency or effectiveness of the payroll function. The second type of operational audit is the organizational audit, which emphasizes how efficient or effective functions within an organization interact. And the third type is special assignments, which arises at the request of management for a wide variety of reasons, such as determining the cost of an ineffective information technology system. Operational audits are performed by internal auditors, government auditors, and certified public accounting firms. The auditor should report to the appropriate level of management to ensure that investigation and recommendations are made without bias. It is necessary for an auditor to determine the cause of the operational problems and to make the appropriate recommendations. Moving on, we will now discuss planning and performing an operational audit. A major challenge of operational auditing is in selecting a specific criteria for evaluating whether efficiency and effectiveness have occurred. More specific criteria are desirable before starting an operational audit. The sources of criteria include historical performance, benchmarking, engineered standards, as well as discussion and agreement. The following are the phases in operational auditing. The first phase is the planning stage. It is similar to planning for financial audits, but the main difference is the diversity created by the breadth of operational audits. The second phase requires operational auditors to accumulate sufficient appropriate evidence to provide a basis for a conclusion about the objectives. In operational audits, the report is usually sent only to management. The lack of third-party users reduces the need for a standardized wording. The diversity of operational audits requires tailoring each report to address the scope of the audit, the findings, and recommendations. Please complete the required evaluation method for Chapter 26 as it will be part of your final grade. Use Blackboard to complete the requirements. You have reached the end of the course presentation for Chapter 26.